Equal to this. Okay. So looking at this candlestick, right? You see the way you marked out the high of October, that is your major liquidity. That is your buy side liquidity, right? Now,
Yes.
you have November low as sell side liquidity. You have October low as sell side liquidity as well. But now, where are we likely to target is the question. This now, what we now follow is your fundamental. I mean, you don't need to understand fundamental so much, but you know we have a lot of news, right? And the weekly time frame will now tell you where we are attacking first. You can just as well mark November low and October low out. Just mark them out. The low of these candles, you can just put a line on them, yeah. Not like that, not like that, just straight line, yeah, like that.
Okay, straight line.
Yeah, just, this is okay
This is
like
it.
this, yeah. And the other month low. Like that. So we have those liquidity below, we have liquidity above. Now, what you can see, right? You see, we have taken
Yes.
the high of November, right? Do you know what is that? Liquidity.
Yes.
Usually, what are we doing? We need to rebalance some inefficiency. I don't know where we find this inefficiency, right? That candle itself, forget the fact that it's a ranging candle, it's an accumulation candle. So within this candle, we need to look for inefficiency. So now, if you measure the 50% of this candle, right? Because remember, this gold is bullish, this price is bullish, and they are cutting rates. So dollar is getting weak, which means these assets they need to go higher, you know. Now, we took liquidity from that candle. We need to pull back. Whenever we want to sell, we need to take liquidity from high, then sell what? Where are we selling to? Either to inefficiency, some kind of, whatever it may be. But we know what the market is doing. Seeking balance, which is inefficiency, and taking liquidity. Now, liquidity has been taken. What do you expect this price to do? Probably trade to, inefficiency. So put, I don't know if you have a fib or something, measure the 50% of that candle.
Okay. Okay, I should have it. Sorry. I don't have a fib. Can I use this?
Yeah, which one are you talking? Yeah, I think you can use something that have like 50% of, yeah, like this. So if that is the 50%, it doesn't matter. But if you go to the next time frame, I think it's going to go out. Or go back to your tools. Go back to your tools. There's something called game boss or something. Go back to your tools again. Mm, hold on. Look at fib. Look at fib. There.
Okay.
Yeah. Fibonacci retracement. Yeah. So measure the from down, it doesn't matter, but from down to the
I,
up.
I don't think I have it settled,
Yeah, it's still the
and
same.
I
It
don't know
doesn't
how to
matter.
use fib.
Yeah. From down, up. We can do this later. From the bottom of the candle to the tip of the candle. Yeah, it's okay. We
Like
know
this.
that. Yeah, it's okay. So put a line in the 50%. Let me see. Okay, the 50% is green. Yeah. Put a line in the like horizontal line, whatever it's called. Yeah.
Okay.
That horizontal ray. Yeah. Put it 50% down a little bit, down a little bit. D- Correct.
There.
Now you can take out your fib. You can now go down to the weekly time frame. So trading is all about confluence.
Weekly.
Yeah, go to the weekly time frames. Right. Now, you have the 50% of that, what is it called? Marked out, of the monthly range marked out. So what can you see around the 50% of the monthly range? First, we have what I would call, you know, we have this accumulation, then expansion. So we expect price to fill this area to rebalance this inefficiency you see in the weekly time frame now. So what many people don't understand is, you see, there is inefficiency in the weekly time frame. There is very visible here. So maybe many people will be
Yes.
waiting for price to come there and like turn around. Yeah, it's possible for price to come there and turn around, but I think price may likely, trade down a little bit to this line that you marked out, you know. So that is just our monthly analysis. Now we are in the weekly like time frame. So in this weekly time frame, what do we have? We have inefficiency, one. Then we have previous week highs and low, which are liquidity. Do you understand what I'm saying?
Yeah.
You don't need to put a lot of lines or something, because we started from the monthly time frame. That's why I just asked you to mark out like previous month low and. But those are liquidity. If price decide to flip later on to start selling down, then those might be liquidity that we will attack later. This previous month's low, because those are the bigger time frame liquidity. But for now, price is bullish, so we expect price to go higher. Right now, you have previous week high and low, then inefficiency. Now, looking at this, looking at this, you can mark down out. Looking at this price action, right? Right. Looking at this price action, do I really want price to come all the way down? I don't know. It's possible, but due to last week, we took out an high, like a high, then we sold down, failed to close above. This is an accumulation, right? Accumulation will occur, then the next phase will be expansion. Where are we likely to expand to? So what we can see is we have liquidity above and below. Are we going to expand to the downside or to the upside? Remember, for the like following the trend, we would like price to expand to the upside. But for price to expand, we need some kind of liquidity below for price to expand. But are we coming for the, what is it called? For the weekly low? I'm not convinced that if we're going to come there. And there is a reason for me saying that, right? Because if this price is bullish, like we know it's bullish from the monthly time frame or something, and we expect buy like higher prices, we need this inefficiency to be intact. Do you guys understand what I'm saying? We need this inefficiency to be intact. Price needs to create inefficiency while we are going somewhere, whether down or up. So we see last week we created this inefficiency. So I don't expect price to come into this inefficiency to go higher. Yeah, we know price, we may like price always like to balance market, but if we are extremely bullish, right? So we need this gap to be created. Now, what can we expect with this price right now is if you fib, they will probably close in the discount area. So which means we are automatically, like we might be looking for buyers automatically. Now, now, you see the wick, the bottom wick, that wick of this candlestick, right?
The
It's
black.
where, yeah, the wick of this weekly time frame. It's where I would like price to reach out to the 50% or something, but go to your daily time frame. Not the whole candle, just the bottom, but go to your daily time frame first. Mhm. Take out your fib. Take out your fib. Mhm. So you see, we have weekly high and weekly low, right? I cannot mark
Yeah.
your your chart anyway. I want you to count these candles, right? If if we are going to attack the weekly low first to sell into to take out this low, right? I would like price. You see, we have red, green, red, and black. I mean, you see these two black candles, these two black candles. These two black candles
This,
will on, let me say, Wednesday, Thursday. On Wednesday candle, the high of Wednesday candle.
okay, yeah. This too.
Yeah, but that high, yeah, that one, especially. Mark a line, put a line there and drag it out. A line.
Yeah.
Is that the high? The high. The high of Wednesday candle.
Okay.
Yes. Mm-hmm. Basically put it in the high, right? If, if, like I say, we are going to attack this sell side, right? I would like price to buy up to that line that you just marked out, then sell to attack this area. Go to your 4 hour, right? So the high of that where you just marked out anyway is still an A-shaped level on this 4 hour time frame. So I would like high, I would like a price to reach out to that level, then sell, takes liquidity from the previous week low, then we can see that buy opportunity to the upside to take out weekly highs and like go more for that highs. Probably we continue going high for the rest of the year, probably, you know. So this is what I would like on gold. But like I say, hardly I predict market, right? When if you go back to the daily time frame, go back to the daily time frame. Yes. You can see how price is misbehaving, right? It's not showing
Yeah.
clear direction. Why? Because we have a consolidation week, basically. And of course, last month was also an inside bar, which I don't expect price to take out high and low of the inside bar before continue. But what I would like, that is why I told you to mark out the 50%, right? We don't, because gold is always moving anyhow. So price can just open tonight and we will drop down straight down to the to this line that you marked out. The range of last month, you know. So
Yeah.
that will be a nice area for gold to drop into, then we see that bullishness or to take out, maybe create a new all-time high or something. That will be a nice area to, to look for longs opportunity. But like I say, it's still very far away. So that was why we trade it bit by bit, following, the nearest liquidity pool, targeting the nearest liquidity pool, basically. So yeah, and if you have any question or something that is not clear to you, you can just ask.
Okay, sir. It was the that A and B shape you talked about last week.
Mhm.
Um, it's a new concept to me entirely, so I don't really understand it.
So you see those, go back to your 4 hour. Let's just see from the 4 hour. Mhm. So every part of these candles matters, right? It does matter. It does matter. So we're not going to say it doesn't matter. So if you go to probably like, if you go to like a line chart, yes, you will not find these wicks in those like in line charts. So the only thing
Yeah.
you find in line chart is those open and close level, the body, basically. That is what you will find in the line chart. So those body, I don't know how to explain it. If I will say it's like a support or resistance level or something, right? Maybe that's the only way I can
Yeah.
put it. Yes. So they are key level. Now, oh, I cannot mark your thing. You see the green candle where it opens?
Can I fix the
This
line?
green candle.
Those one.
You see the green candle?
This candle here.
Yeah, there, yeah, there. So if you mark it out, some people will say that is the other block, right? Mark that area out. Use the horizontal ray, just take it on it, like the one called horizontal ray. Put no, 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 not there. Down, down. The open
Okay.
price. The open price, yeah, there. So if you mark it like this, some people will call this your other block, yes? And it's still an open and closed level. This is a V shape. So these things, like you see people say other block, all of this, they are just key levels, you know. It doesn't matter what you may call them, they are just key levels. Levels where institutional trader operates, you know. That is why the best way to call them is like where the market closes and open. So they are very sensitive to, like, I mean, those are where institutional traders looked at. For price to buy there and open, it open there, first of all, sell down or whatever, buy all before going to the original direction. So which means there is that area is very strong. It's very strong because that is the area where price or whoever is pushing price push the market towards to like where the market was going or something. That area is very strong. So whether you want to call it support or resistance level, I don't know. But yeah, in real life, these are open and closed levels, you know. So the shape is just like V. If you change it to line, it will be like V, and if you change it to like line, the top side will be like A. That's why we call them A shape and V shape. But for me, I prefer to call them open and close level because basically they are open and close level. So whether you are calling it other block, A shape or V shape, doesn't matter. They are just open at every point of interest, apart from the highs and the fair value gap. They are just open and close level. Where you call your support and resistance, whether your supply or demand or something. Yes, they are just open and close level.
Okay, sir.
Mhm. And they are more precise. Like instead of using
Thank
your
you.
whole other block or something, if price reacts to that level, it means that it's a strong level. But if you mark the whole other block or something, price can eh, trade in, do this, it might not hold or something. But this kind of level, like when you mark them out like this, they are more precise. Once you see a reaction, price is rejecting that level, you knew automatic, okay, yeah, price is respecting this level. It's just for you to go to the right time frame and look for what you want to see, like a change in market structure or whatever. That is just the next thing you need to do. Once you see it, yeah.
Okay. Thank you,
Mhm.
sir.
Yeah. So to be honest with you guys, gold is ranging now. And I know the reason why it's ranging because it needs to expand for sure to the upside, you know, for sure to the upside. But you cannot just jump in because it's going up. It definitely needs to take some liquidity from the downside or something before that movement will occur. And I will not be surprised either way if we start ranging throughout this week. I mean, yeah, we have news this week, so it's impossible. At least for the first today or tomorrow, if we will range or something, I will not be surprised, going up and down, up and down, up and down without heading towards one direction. So I will not be surprised. But for sure, we are expanding to the upside. Any other question?
No, no, sir.
Mhm. Now go back to the weekly time frame. Hold on. Take out the last line, which is November, no, October low.
Sir?
Squeeze your chart in. That last line, which is October low.
This
No,
one.
no, no, that one, the down one. Yeah, you can take that one out, it doesn't matter. Mhm. Those doesn't matter. So basically, this is what, yeah, it's okay. Remember, this line is the 50% of that last month candle, right? You can
Yes.
just leave it
Yeah.
in, but probably price will not get there. If it gets there, it's a bonus anyway. So we have like news this week. So I don't know how much we will drop before we start going higher. But yeah, and this is the low of last month. But for sure, I doubt if we are coming to take this low for sure. I'm not sure about that. This is this. Now take out of the high that we targeted last week. Take out the line so that your chart will not be crowded. Yeah, you take that one out.
Okay, this one.
Uh, no, oh yes, so you can take that one out. Take this one out. That one, yeah, that one. Take it out. Correct. Now, so Look very well. Look very well. We have the high and the low of last week, right? I mean, we can see
Yes.
a visible fair value gap right there. Leave that one. Leave that one here. Leave that line. Don't touch it. Leave them. Now, you also mark a line. Change the color of that line. Where I said I would like price to reach out to
This
before
one.
selling. No,
50%.
no,
Okay,
leave that
here.
one. No, that is just a low and high. Look at the line up, up in that black candle, form of middle line. Change the color. Do you even know why you mark that line?
Yes, I think that was the high of weekly.
Wednesday.
Sorry, 50% of, yeah.
No, that was high of Wednesday. Change the color to red. Right. I will come take you back to the weekly. Now go back to the daily time frame. So you can see it's the high of Wednesday. I ask you to mark.
Okay, yes, the high of
So
Wednesday.
you are marking something, you are not even paying attention. You have to pay attention. Now go back to the weekly time frame. This is good. Now I want you to flip that candle itself, high to low. From the high to the low. Mhm. Now uh, zoom out your chart, yeah, like this. All right. So price is where is currently in what? Your premium area, right? So basically, if
Yeah.
we are looking for
Okay.
sell, we want price to come to where? Price is
Discount.
in discount right now. Price is in discount. If we are looking to sell, we want price to come to our what? Premium area, right? So now, where will price reach out to? You can leave that chart. You can leave that chart on that the Fibonacci. Leave it on. Then open your chart very well. Just leave this Fibonacci on. Open your chart very well. Yeah, yeah, like this, like this. Where do you see? Yeah, it's okay. Where do you see the 50% is? It's right like close on top of the area, right?
Yes. Between.
Right. Remember, every candles, I label out the important area of those candles. Those open at close level, the 50% and the tip, which is the very top wick or low wick. It doesn't matter depending on the candle you are looking at, right?
Yeah.
Now, this green candle, yes, the green candle, yeah, that green candle there, their price took liquidity out.
Yeah. Okay, this
Just
one.
take, yeah, this last week, not last week, but the other week, the green bullish candle. Take a horizontal ray, this horizontal ray, take a straight horizontal ray, straight, see that
The
horizontal
vertical.
ray? No, horizontal ray. Yeah. Stick it on top of that green candle. On top of the green
This
candle. No, no, no.
this one.
Yes, on top. The wick, the wick of it. The top wick. The top wick. Open your chart very well so you know what you are putting on. Is that the top wick? Yeah, put it
Yeah.
on. Open your chart from the side where the numbers are so we can see. The side where the numbers, like that. Okay, yeah, that is the top wick. And now, again, I said the open and close level, which is the top, which is like A shape, that is right there, the top of wick, and the 50%. Those are the area that matters. It's not like that matters. If I'm looking to trade or something like this, just those area are very important. I want price to come there and probably react. Then I can find like look for a change in state of delivery or something for me to able to catch the trade down or up, depending on where I'm doing. Like now, your fib level, can you make your fib level where fib it very well of that candle, of this red black candle, I mean, put it on top very well, arrange your fib on top of the candle, the top side, I think is the only area you need to touch. Or is it on top of the candle? Maybe.
Yeah, it's on top of the candle, the black
Okay.
candle.
Yeah. So now, where is 50%? Right here. Then we are
It's
looking
green
for
line.
premium, right? Premium POIs. So you already marked tip of the green candle. Now, the black candle itself, remember the open and close, that green close is there, the black candle opens
Yeah.
there. Also matter. It's very important. And also is the 50% of that range. So again, you have to pay attention to all those areas. I will not be surprised price will buy up into that area, that tip, which is the open and close. First, the first point of interest you will encounter when price is buying up is basically the 50% of that range and the open and close level. They are very similar. I will just classify them as one. Do you understand what I'm saying?
Yeah.
The 50% of that of what you fibbed, you know, and the high of the black and not the high, the body themselves of the black and gray candle, they are like relative, you know. So how we expect or watch out for price to buy into those area and look for reaction for selling opportunity to the downside. Where will you target first? The low of that candle, of that black candle. Then, if the daily is showing us or willingly that we want to continue going down, you know where to target more and more. The high of this black candle right there will be the next target, then probably the 50% of the previous month area where you marked out. Do you understand what I'm saying?
Yes.
Okay, so that is why I ask you to you maybe after this guy you can go to your chart later or something, just mark them out yourself. But yes, those areas are very important. Go to the daily time frame now. And you can, if you want to delete, what is it called? Take out the fib. It's okay. You can take out the fib. It doesn't matter. Yeah. So if you look at this daily candle, like Friday candle, right? The Friday candle.
Yeah.
Now, like I said, trading is about confluences, what you see. Like you have to make the things, these things have to make sense to you. Like, there's a reason for price to come here, all of this, you have to know. Anyway, now, if you looked at Friday candle, if you measure the whole range of the Friday candle, right, from high to low, you can also as well see where the 50% of that candle is. Or you just measure the wick, it doesn't matter. But yeah, you can as well see where the 50% of the wick or the whole candle is. So, like I say, it's very important. Those kind of area are very important for price to come to and turn around or something or react to or something, depending where you want to trade. In this case, we are looking for a bit of lower prices before we will take off or something. So those area are area where you will pay attention to for opportunity to trade them down.
So can I come?
Yeah, hold on. I see your hand, Wisdom. Don't worry. Hold on. So, do you have any other question? I know it's very hard for me to annotate on your chat because you are using phone. So,
Like if I'm to understand, okay, let's say we are looking at the daily, we'll mark
mhm,
out the tip, the high and the low, then the 50%. Then wait for market to react on either of these part of the candle
mhm.
to know
So,
the
you want
next
me to tell you
target.
something? Let's say you marked out, forget the fact that your markets are from the weekly. So, let's say we marked out we are looking for this daily range, right? This daily candle, yes? Let's say you mark out the
Mm-hmm.
high and the low. You understand what I'm saying?
Yeah.
So you mark out the 50%, right?
Yes.
So if price run the low, for example, yeah, maybe you see a confirmation for price to buy, right? So if you are
Yes.
buying this market, I will advise you to target the 50%. There is
Okay.
a probability that price will hit the 50% and it can turn around and start selling again. And that is when you see you will be in profit. Then for some reason price is coming back, even taking you out.
Okay.
So just for precautions, for your like a time will come, you will understand, okay, yeah, it's time to hold it all the way, it's going higher, you know.
Yeah.
It's gradually, those time will come, like, yeah, it's time to, like, it's where we are going higher or something. It's those time will come, so you should know.
Okay. Thank you.
Yeah, but now these are just like where areas where you want to be looking at for now, so that you can be catching a trade, gradually improving in your knowledge.
Thank you, sir.
Mhm.
Thank you.
Wisdom.
Yes, sir.
Okay, are you ready?
Yeah.
Show me how you look at your chart.
Okay, let me stop sharing, right?
Yeah, you can stop sharing because I still have to share my screen with that with. Yeah.
So can you put on my screen?
Are you using phone? Yes, we can see your screen.
Yes, my laptop had an issue.
Okay, okay.
Chromebook had.
Mhm. Now show us what you have learned so far, like how you approach your chart.
Hello?
Yeah, we can hear you, and we can see your chart as well.
Hello, sir.
We can hear
Are you
you.
there?
Yeah, yeah, yeah. Are you guys not hearing him?
I can hear you.
This is where I think maybe my own error is that I've been taking trades even when it has not gotten to the 50%. Because when I did my top down on this gold here,
Yeah.
the weekly here, I had this as my key level, this area here as my key level. So
Well,
I'm expecting price to be likely get here first and react. Then I went
are
to
you
my
talking
daily
about this week?
and on the weekly.
No, no. Are you talking about this week price action? Are you hearing me?
Like what price could possibly be if it opens? Like
Yeah,
Yes,
like
I can hear
there is
you.
nothing wrong. So you are basically talking about how you want price to act this week, like coming into this week, right? You have that A-shaped level marked out, yes?
Yes, sir. Just like what you
Can
yes.
you
But
hear
now
me?
this is what I did when I go to the daily. When I went,
Mm-hmm.
yes, sir. Yes, I can hear you.
Okay, go to
When I
the
went to
daily.
the
Let's see.
daily, I
Yeah.
can see that we are still having based on possibly happen soon. And though I did not even take note of the 50% looking at it from, but I see this A shape level too. This key level here, this one.
The green one, where you put a green line.
Yes, let me I use colors for each time frame so that
Yeah, it's okay. It's not
I
a
can know
problem.
where
I
I'm
can see what you are
located.
talking about. Yeah.
Set price, I know that maybe price could open now
Mm-hmm.
and first see this liquidity here. And even if you buy for it, even if you want to buy,
Mm-hmm.
let me see the liquidity, you could come and react from here. Or even
Mm-hmm.
if you want to, I went to my 4 hours. So I see that price is still going low, that it could still come from this hour point of liquidity, like sweep this 4 hour, react from here. And so
Mm-hmm.
really, are you getting?
Yeah, your
And
network is
just said,
breaking. Wait,
okay,
hold on. So
assuming
you see what I'm telling you, like there was a situation like this. I don't know what pair was that. I think it's the same code. When you guys were all focusing on the 4 hour imbalance, when I told you guys, no, I don't want price to trade into the 4 hour imbalance. I want price to create a daily fair value gap, then trade into it before we continue or something. So fine, we have fair value gaps in this market. Not every time that you see just a fair value gap, you expect price to trade into it. Of course, fair value gap can be disrespected and become an invasion fair value gap. It's still going to work, therefore, continuation of the opposite trend later on. Do you understand? So, what you want to do again, go back to the weekly time frame. Go back to the weekly time frame. Now,
I'm here.
first of all, price closes in your, let's say price is in your premium range right now, in your discount range, discount of the weekly or previous week range. So, which means possibility that price may wants to buy into premium before selling, right? Where does your premium start from? 50%, right?
Around if I fib,
Hmm?
if I fib around 50%.
Then Phoebe, let's see. We are talking about from
Ah,
from up to down because you are looking for selling opportunity. You guys have to know how to Phoebe as well. Open your whole Phoebe so that we can all see it, like make it wider. Uh-huh. I thought it doesn't have like, yeah. So basically the 50% is the 50% of that some blue box you marked out. Now you cannot go down to the daily or something. It doesn't matter. You already have the weekly range and the 50%. Also, you also marked out the A-shape level, so which is good. Now, you see the 50%, that is why I say like you are doing something. Yes, you are doing something, but you have to make them make sense. You know, you have to make them make sense. Now, if you go to the 4 hour, I want to show you something. Go to the 4 hour. You see the fair value gap that you marked out from the 4 hour, right? Is the 50% of the range. But you only marked out the fair value gap because it's a fair value gap. You didn't even know it's the 50% of the range.
See why I mark the fair value gap here? Because I still try to use the this concept. Like, since I went to the daily, I saw that the last previous day was the sweep, and I should be expecting lower prices, right?
Mhm.
I should be expecting lower prices. And I remember what you say, that once you say that this could be where price react from. Let me take out this my keep. This A-shaped level could be where price will react from. But I want to know where the intermediate time frame is heading to. And when I got to the 4 hour, I saw that it's still selling, it's still dropping.
Yeah.
4 hour is still dropping. You can see, right?
Mm-hmm.
So I'm thinking that it could possibly come because there's also a key point of interest here. This fair value gap, because it's still dropping. Like close below means low prices, or like they all correspond. Price
Yes,
could sell.
we
So
for sure.
before I'm going to take
One
the
thing,
trade, I
one
want to do
thing,
something
yeah,
like a liquidity.
correct. One thing you should know is that we, for sure, even our Wednesday classes, I told you guys that I want price to sell. If you guys remember very well, I said I need gold to sell. Of course, I can see what gold is doing. I wanted gold to sell. That's what I spoke about on Wednesday class. Now, we are still going to sell somehow, but not like this sell you were like selling. For sure, price is going to buy up, but this is just a pullback into some range, into some point of interest before taking off, right? Now, we are looking for this selling opportunity, but looking at the 4 hour is kind of is kind of how am I going to say? Uh, the time frame is too little. So if you go back to the daily time frame, right? And I will not be surprised. Listen. I will not be surprised. Yes. Price will first of all sell down, take out, I don't know, Friday low or and Thursday low or something. It doesn't matter. In as far the weekly, you see the weekly low there is still intact, and the weekly high is still intact. Those are your major liquidity. I know there might be days we take out the low, we come back up, then go back down again. It's possible, but you know, we might sell down first, take out some lows as liquidity, then we will now buy up into some point of interest before selling again. It could be possible like that. Do you guys understand? So those are things you have to put, be aware of. But when that opportunity will come, so that you will not miss it, that is when. Because again, if price will sell now, if price open, right, and take out some liquidity, maybe you might not catch the buy or something, but you want to prepare to catch the sell. And this sell, you have to have the levels for the price to come to, for you to be able to, sell this market back down again. Those are the levels you want to be looking at. Yeah, you have A-shaped level right there, fine, and for that A-shaped level to kind of hold, maybe probably today is going to sell right now, the whole day, which is Monday. Then Tuesday we pull back up into that level where you just marked out right now, where that A-shaped level or something. So it could be something like this. But for sure, we are going to sell somehow, then probably buy back up to sell into the main point of interest that we will be looking for long from. And again, this is the market. You can just buy up into your point of interest before selling. So anything is possible. But you can see that market is like is selling, but don't get caught. It's very important. You have your weekly low and high marked out. Of course, below the weekly low, we have inefficiency there, which is nice. Now, the reason why, and when I share my chest, I'm going to talk about that. But now, so wisdom, if I may ask you, right? So if this price wants to sell now, right? Where is the point of interest in your premium you are looking at for price to reach out to before looking for selling opportunity?
My point of interest. One is this key level.
That one, yes. Okay. And the other one?
And if you could still use this 4-hour FVG sell.
For 4-hour fair value gap is okay. It's okay. But again, I don't know. I'm not really looking at that. I know it's a fair value gap. I'm not really looking at that. So I would like price to go a bit higher, more than that, before selling. So that level is okay. And the level that you marked out, I think the weekly A-shape level or something, is the yellow line, yes? That yellow line. Before the previous week high, the second yellow line, what is that? That one.
Level.
Huh?
Yes, on the week. Yes, those are point of interest for me.
So yeah, like
depending on
now.
Like I would prefer those kind of level, like that. Either that A shape from this weekly, or the 50% of the candle itself. This is how we prefer it. Basically, remember, again, you guys should not get caught. Don't focus on one direction too much. You have to be flexible. Wherever the market show you that we are going, that is where you go. But you already know, there are points of interest right here. If you are going here, yes. Again, this market is bullish. Candle was indecisive accumulation. So after accumulation, we expect expansion. Expansion occur. Like if you see, we take out previous week low before we expand to the upside. That is just price came down to manipulate, then expand. And it can just expand straight. It's not a problem. We cannot control that. Just remember again, that candle was indecisive, was accumulation candle. And every time accumulation occur, we expect an expansion, which is distribution. Do you understand? So distribution can occur in two ways. It can occur like after we manipulate. And while we manipulate, we just need liquidity to fuel that move to the other side. And it can occur without manipulating the low of that week. We can just use internal liquidity. What are your internal liquidity that we have? We have like the dailies, previous days lows. Go back to the daily. So those can be the liquidity that we need. That is why I told you, if the low and high are intact, those are the major liquidity. So we are playing to one side for sure. So price can just come down, take out Thursday low and Friday low, then expand to the upside because we need expansion. Do you understand what I'm saying? So those are things you also have to pay attention to. Knowing how the candlestick closes, what they are telling you is very important.
Yes, sir.
So any other thing that you want to like work on or something regarding this?
Should I go to GU?
What?
Okay. What are we doing? What about GU?
We'll talk about this later. Don't worry.
Stop sharing.
Rose,
Yes, sir.
you want to share your screen?
Dunamis said is next after wisdom. Let Dunamis go first.
Okay. Dynamis. Oh, okay. Yeah. Dona,
Sir,
oh yeah, share your screen.
when everyone see my screen,
Yeah, we can see. Just started screen. Yeah. So one good thing is that everybody here, we are trading the same thing, right? So that is one good thing.
yes, sir.
So yeah,
Oh,
Dona,
yes, sir.
I like this area that you marked out, the red candle, the tip.
Yeah,
It's very important, Yeah, if price may decide to come, it could come there, but there are many other points of interest. So
let me go to the daily time frame and see.
so
So for
there's
the reason,
something. Oh yeah, go on.
so what I was looking towards is that these are the two levels I was waiting for. I was waiting for market to come back to this A shape here.
Okay.
Then if this A shape does not hold, I was thinking this one, the upper level. This one.
There is nothing bad at all from them, trust me. So those levels, we are talking about levels, right? Those levels, you will know if they will hold or not because they are just level. You mark them out. You are not the
This was
price,
just
right? So when price get to your levels, how it reacts
yes, sir.
and what session it may be, that will
Matters.
tell you that yes, price is respecting my key level. I'm looking for opportunity to trade this market down or up. You can have your key levels, price
Yes,
will
sir.
not react to it. It's a key level doesn't mean that price has to respect it. We have a lot of key level that price didn't respect.
Yes, sir.
So that is why you as a trader, you must have that patience and you must look for that your confirmation that makes that key level valid. You don't want price to invalidate your key level and you still want to take the trade. So key levels, we have thousands of key levels here in this market, but what makes it a key level is when price respects it.
Yes, yes, sir.
I I see where you are marking out. They are very good areas. Okay.
So these are just the levels I was looking towards because taking a look at from the weekly level
Perspective.
perspective, price already taken at this high.
Correct. You get it. That is a pure liquidity. That is why, I mean, starting the week, I'm not seeing price going for that high for first. I want to see price, first of all, probably come down, then before going overall high or something. But yes, it's a
And
good thing.
sir, you made mention of something which I'm going to apply now. You said we should. Oh, sorry, flip the 50%. So now I'll put a line on that 50%.
Correct.
And see how it react around that level. Well, let me go down to the what do you call it? Let me go down to the 4 hours to see what's there. There's a point of influence there. There's no point of interest, it's just an imbalance.
Right. So
Yes, sir.
now look at that area. We have a fair value gap and inverse fair value gap around that area. So it's very important you know that, okay, yeah, there is, the more confidences that you have, the stronger the level. You know that, right?
Yes, sir.
So those are just bonuses. Those are just bonuses. So, the same way people are looking at a price to come to this fair value gap, they can look for entry, but some of them don't even know yet. The reason why price is going to respect that fair value gap
Yep.
is because it's a higher time frame,
It's the 50% of the higher time frame.
basically. So it's a lot of things. And that is why sometimes you will see the same thing like this, fair value gap and like this. Price will not respect it because it's not the 50% of the higher time frame candle or something. So it's just different. So price may respect it now. Doesn't mean that next time price will respect something like this.
Respect it. Okay, sir.
So it's something you have to. Now there is more confidence in that price is going to respect that area,
Yes, sir.
So, and there is a chance that price may not respect that area.
Sure.
Those are just confluences and key levels.
Yes, sir.
But once price react to it and give you what you wanted to see, then it's your opportunity to take advantage on the trade or something.
Also, I have a question. My question is that, so the most important place where we should be spotting our entries from the higher time frame, we should be looking at, we should pay more attention to is like the 50% and the highs and lows.
Not just the
Right,
50%. Not just the 50%. That is where people are getting it wrong. So let's go back again. You have other blocks, right? The one you know as other block.
I should go back to the 4 hours.
No, it doesn't matter. I'm just saying. I'm giving you point of interest now, right?
Okay, sir.
You have other
Yes, sir.
blocks, right?
Yes, sir.
It's in fact it's a lot. It's just a lot. You have breaker block, mitigation block, other block.
Yes, sir.
You have fair value gap.
Yeah.
Do you understand?
Yes, sir.
So now, this is something I want to ask you guys, all of you now. So looking at this chart now, right?
Yes, sir.
Maybe you can delete your line. You don't need to delete your line. Tell me, if you are an order block trader, right?
Yes, sir.
Where can you find order block in this chart now?
Can I mark?
You can mark out, it doesn't matter. Yeah, on this time frame, you can mark out something. Show me your order block in this time frame.
For sell.
Just let's say we are looking for selling opportunity. Show me your selling order block in this time frame.
Okay.
And you must explain to me what makes it an order block.
Order block. Oosh. I'm coming, sir. Sorry.
We have a lot of time. Don't worry.
Yeah.
That is your order block, yes?
Yeah.
Now, I want everybody to unmute himself and answer this question. Is that an order block for you guys or not?
For me, I'll say no, because if you are looking for selling opportunity, I think the previous green to the red candle is like the nearest order block to look for selling opportunity. Like,
Okay, that is your opinion now. And
yes.
anybody else, we are just talking about what Wisdom marked out. If that is an order block and why?
Me, that is not another block.
Correct. And anybody else? Vasi,
Let me check. Let me go to the.
no, stay on that time frame because we are talking about higher time frame point of interest. And you started your analysis here, just for example, because this is where a lot of people get something wrong. Vasi, are you here?
Yes, I'm here.
Is that an order block or not?
For this price action, I would say that one from down, green one.
Okay. Now, Rose, you and Rose said the green one. And Donald, you know the green one they are talking about?
The one at the down, I know.
Which one?
This one. I'm coming, let me mark.
Yeah, mark it out so we know.
This one.
Yeah. Okay, so that is how you guys are going to mark it out, right?
Yes.
Rose and Vasi. Yes?
Yes.
Okay.
Yes.
Leave that one on as well, Dunamis. So now, the reason why I'm bringing this up is because we make measure of order block, fair value gap, mitigation, and breaker. It doesn't matter. All of these, they are all point of interest, right? Now, there is no mitigation here. There is no breaker here. So there is no fair value gap here as well, right?
Yeah.
Now, so what you guys are seeing here now, you guys are saying we have order block, right? So we agree that there is no mitigation, there is no fair value gap, there is no breaker, but the only thing we know that is here now is order block, right? And now I said you guys should mark out the order block. So you, Vasi and Rose, choose the down one as another block, and you choose the up one. Wisdom and Favor, where do you think there is another block here? And which one would you choose?
I'll choose the
So
down.
I don't think there's another block because I didn't see a proper break of structure. And
Correct. And
said
that
that
is the correct thing I'm seeing. There is no other block here because none of this is valid. And even if there is another block that I will say the one the name is marked out, which is not even another block, and it has been mitigated. You know, it's not another block, but still it has been mitigated. So now, let's say there is no other block here. And again, there is no other block here. There is no breaker, no mitigation, no fair value gap. So, which point of interest do you know as a trader that you can use to catch a trade from here? This is what I'm trying to explain to you guys. That's why I'm introducing or giving you guys the whole tips. If you cannot find order block, breaker block, fair value gap, mitigation, there is other things you have to look out for rather than looking for all of this, which is the 50% of candles or wicks. Those can serve as your point of interest. Because institutional, they are still going to do whatever they will do, regardless of there is no order block, there is no fair value gap. They know where to push the market to and do their thing. That is why I'm adding this knowledge to you guys. Also, watch out the 50%, the open and close of those levels. It could be 50% of the whole range or of the wicks of a candle. That is why I'm asking you guys, is there another block here? Is there a fair value gap here? That is the reason why you are starting your analysis from the higher time frame. Because in the lower time frame, you might have like 10 other blocks, fair value gaps. But is it really aligning with the higher time frame point of interest? That is the thing. Do you understand what I'm saying now?
Yes, sir.
Now, you guys may be surprised. Donami, I want you to delete all your charts. Delete everything in your chart.
Okay, sir.
Not everything, but yeah, around this range. Delete it. So let me explain real things to you guys real quick. Mark out the A-shaped level, the very top bottom, the very top. That A-shaped level. Right. That is where markets react to on Friday. That is why you see this drop. But none of you know. So you see, within the range, these are all liquidity. Go back to the daily candle. I want to show you guys something. Go back to the daily time frame. Now, open your chart. Open your chart very well. Yes. Open your chart. Now, see the first red candle, that red candle, right?
Yes, sir. I should fib it.
No, don't fib it. Leave. It's okay. The next red candle, did we close below that candle? That is my question.
Like with a body?
Yes.
I would say no.
We didn't. Yes, we did not.
Yeah.
We did not close above or below that candle. Again, now, price said he wants to go higher, right?
Yeah.
That is basically what price is telling us. Now, going higher, where can we go now? You now have 2 points of interest. First, we have the two open and close level. The A shape, open and close, and the candle series, open and close. You see how price buy into that level and rejected, right?
Yeah, that's true.
It didn't close above that candle. It tells us that price wants to sell now. Now, where are we selling to? You can mark out the A shape or that one. It doesn't matter. First, how you follow the price action step by step. You can mark out the A shape. The A shape. It doesn't matter, like I say. Marked out the A shape. We are following the candle. That is Wednesday candle now.
This A shape, right?
Yeah. You don't have to extend it to the end. To Wednesday candle. I'm explaining each candle to you now. Yeah, there. That one. Now, price came there or to the open and close level. It doesn't matter. It reacts. What the price did, it took liquidity off that high, then react to that level, failed to close above that red candle, which also tells us that price wants to go down. Now, to where? We don't know. Now, it failed to close below that long red candle. It also tells us that price wants to go higher. This is how price is looking for liquidity. This is how price engineer liquidity is looking for liquidity at this point. No direction, but liquidity. up and down before it will make a decision. Now,
Mm.
looking at this price, I don't know from the lower time frame or something if there is order block or something which we will go later. You can see this candle. Where can this candle come? Like, where can we find a point of interest to buy this market up? This is where you want to measure the 50% of the week. What are you doing?
Okay.
50, not that one. 50% of this down candle. Yes, that one. If you measure the 50% of the week, you don't hear what
Of
I'm
the
saying.
week.
Candle week.
The week abi wig.
The candlestick week. The weeks,
That is it now.
the shadow, yes.
That's the
I mean, you
50%.
didn't, but it's okay. So now, because Thursday tells us that price still needs to go higher, right?
Mm.
That's what I'm explaining to you. Thursday told us that price still needs to go higher because it failed to close down. Yes. So now the 50% will now be a point of interest for you to look for buying opportunity. I mean, you didn't even mark it very well, but it's fine. You know, if you go down to your lower time frame now, whether you
Yes.
marked out in 50, it doesn't matter. Yes. If you go down to the lower time frame,
Mm.
so you see how price came there and reject
Reject and start.
again.
Boom.
Go back to the daily. Go back to the daily. Because you are asking for other block, all of this from the daily. That's why I told you there is no other block. But instead of you focusing on other block, all of this, there are other things you guys may be looking at. Not every time you need to look at all those things. When there is clean price action, your other blocks or your fair value gaps, you don't need to look at all those things. Yeah, but you can still look at them because price will definitely come there react. Now, that upside, you see the candle, the wick, mark
Yes, sir.
fib it and mark the 50% out as well. Not that one. What are
On
you
this
doing?
candle.
No. Price is
Which
humping liquidity. You don't know that the high of that candle is liquidity automatically.
yeah, this one.
That top, oh my. See the red candle, the very first red candle, the 50%, because that is a range now. Yeah, that candle. Mark out the,
Yeah.
measure it and measure the wick.
Okay, sir. Sorry, sir. Wait a mistake.
Down, down, down. Yeah, it's okay anyway. So the 50% is where price may likely reach out to. Because what you don't even know, price has taken liquidity from the weekly perspective. So we expect price to sell. But where we are expecting price to sell to, price is not getting there yet. Rather than engineering liquidity, looking for liquidity up and down. So it is rangy, but you can still trade it.
Mm.
So now go to the 4 hour. Look at the way you're marking your chart anyway. It's left for you. Let's see price. Now, you see the 50%, right? It's where
Yeah.
whether your premium and this can start. Now, if you look at the 50% of that week, that top side, yes, there, that one there, you can see above it, there is a level. So, which means whether the 50%, whether the A level, you already have a point of interest to short this market down. It's simple as that. And from this downside, the 50%, where price react to, you already have a level to buy this market up.
Up.
It's just for you to look for a confirmation to enter this trade up. or sell this market down, you already have a point of interest. And do you see this point of interest are like other block to you in this time frame? No. So not every time you have to look for other block, fair value gap, all those things. No, there are other things you have to be looking at as well. What are you looking at? You see, there is the A shape and there is the V shape, down and up. If you take out the rest of the line, leave the up and down, and it's basically the 50% of that one, of the downside. Do you see that? Are you here?
Yes, sir, we're here.
Do you guys understand what I just did? Hello? So now go back to the daily. Oh, he left. Rose,
Yes, sir.
you can share your screen. It's the same thing anyway, but yeah.
Give me one second. Okay. Can you see my screen? Okay. Right here.
So again, the same thing what we're talking about, you know.
Mm-hmm.
If you, because but like I say, this market need to sell down to some place before we will buy. But I know we are bullish on gold. So
Mm-hmm.
we have a lot of news this week, which may trigger a buy movement, you know. But coming into the week, Monday, Tuesday, because I think we have this news Wednesday or I don't know which day. But anyway, for price to buy, we need some kind of sell side liquidity
Mm-hmm.
before we buy up. So that is why you see price is giving a position of selling or something, you know. And again, looking at this daily time frame, you know, not every time, but price closes in what? In a discount area. And for price to sell, we need price in premium area. So which area are you looking for? Which premium area are you looking for?
For price to sell, oh, sorry.
Yeah, we always selling from premium, buy from discount, you know. So looking at this price action, right? Price took out multiple highs, liquidity into a level before selling. Do you understand?
Yes.
Now, let's say this candle, this red candle, this daily candle, is the one you want to use to sell this market. But automatically, price is in discount, right? So you want price to come to your premium before you will sell. Which area in premium are you looking at? So
No, the
that is,
50%.
Yeah, that's where you can mark out the 50% of this candle because there is no other block that you can mark out right now. Do you understand what I'm saying?
Yes.
So this is the reason why I introduced like the 50% or where price took liquidity out from. So price can also reach out, retest that level because that level is a form of support or resistance.
Mm-hmm.
Price broke through it, took liquidity, break back into it, and price will now come to retest that level as a support or resistance area, then continue. So such as you see where you put your sign there, the high of that candle, no. Come down, the green candle, the high, yes. So basically that is a support area, a resistance area before price break through it, then come back again. So price can test that area and continue selling. But that area, just mark that with another color first. Just mark that area out with another color. Don't fib it. Mark it out with line, just like you drew all those lines. Yeah, like that. Change the color. Style. Yeah, that pencil, that
Sure.
pencil. Yeah. Put it like blue or something or yellow. Okay. Now, that high, price can test it and sell. But again, if you flip the whole candle,
Flip the whole of this candle.
of that Friday candle. No, not that one.
Okay.
The red candle. Flip it down. Now, it's okay. Now, that yellow line, is it in your premium or in your discount?
Premium.
No, it's impossible.
Is it discount?
It's in discount. Above the 50% is your premium. Below is your discount. So that level is in your discount area. What do you do in discount? You buy. You cannot sell from there. That is why when Wisdom was the one that shared his screen first, or Favor, I don't know. I asked her, his Favor. I asked her to mark out the second green candle, the high. You see that green candle, the high?
This one.
Yes. Mark it out. Yes. That area is the one that you have on what? On premium.
On premium.
You want to sell from premium, buy from discount. So that is the reason why I said mark out that area. And again, we have this whole range, the 50% price can react off there and start selling. Because, I'm just saying, but you already know there are a lot of areas that price can reach out to and sell because we are looking for sell. And you know where to target. These lows are where to target. So go back to go to the 4 hour. Let's just see. Yes. Now, you see that area, the top side, the premium. So, to be honest, that area will be some area that I would like price to reach out to for sell, before selling, before I will look for selling opportunity. But again, going to the weekly time frame, 50% of the week is around the level of the first area, So
do you want to go to the weekly?
You can go to the weekly, it doesn't matter. You can take out your fib, go to the weekly. And yeah. Okay, now flip the weekly candle.
Okay.
Don't take out anything, Yes. And you can see the yellow line that you first of all marked out, right? Is in your premium in the weekly time frame. Do you understand?
Yes.
Now you can go back to the daily. So, which means you see those candle high, right? The two high that you just marked out.
Yes.
The yellow line. So in the weekly perspective, they are in your premium area, which means price can react off any of this area and sell.
Okay.
Because you don't have any other block or something that you want to be looking at. You understand what I'm saying now? So those are also key levels. So, which means price can react off any of this area and sell. Because you don't have any other block or something that you want to be looking at. You understand what I'm saying now? So those are also key levels. 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 So do you guys understand what I'm explaining?
Yes.
Yeah.
So this is how you can look at the market in other way than looking at fair value gap and other block. Because in this time frame, there is no fair value gap. The price wants to, yes, these weeks on candlesticks, they are inefficiency, they are fair value gaps, but not visible fair value gaps. You know, it's a lot of volumes. And when there is volume, that is when you have displacement like this, like price gapping up or down, creating fair value gaps. It's because of volumes, massive liquidity. Price didn't give the other people
So I
chance
have a
to
question.
participate again. Yeah.
So please, my question is that I have two questions. So basically, one of the important thing I get to notice that you are doing, which I don't know, I just want to ask if I'm right, is that you read price actions, like how the candle closes. Is still that, like, does that apply to how you take your trade? If the, like
So
now, sir?
yeah, go on,
Okay,
finish.
because like now from this price action we are seeing here, this candle refused to close below this one, and this other one refused to close below this one.
Yes.
So that means does that apply to how you take your trade? That's the first question.
So first of all, right,
Yes, sir.
candles are, in fact, if you don't know the candles, you don't know the market.
Mm.
If you don't know the candles, you don't know anything in the market. The candles are your structure. The candles are your roadmap to wherever. These candles are telling you where the market is going, just like your Google map.
Yes, sir.
So, yes, candles is what I'm looking at. I'm reading.
Mm. Okay, sir. Thank you very much, sir. The
So,
second,
okay.
are you done, sir?
No, yeah, I'm done. Continue with your question.
The second question is, what about now that you're teaching us how to find entries without, other blocks, fair value gap, breaker blocks? What about if we can spot like an A-shaped level, like a clear A-shaped level that have not been mitigated? Can we still make use of that from the higher time frame, like from the daily
Yeah,
time frame?
why not?
Okay,
Why
sir.
not? But the only thing is that now, is that in your premium or discount? Okay, fine, it's in your premium or discount. Again, if that area is in your premium or discount, right?
Yes,
Now,
sir.
looking at the whole range of that before you get to that A shape or V shape level, looking at the whole range,
Yeah.
you can actually mark out, like mark the whole range and mark out the 50% because if there is enough liquidity in that,
50%.
listen, like I say, look at the range. I don't know where you have the A shape or V shape,
Yes, sir.
depending on the trend or on the price action or wherever. Yes.
Yeah.
If there is enough liquidity that market or enough volume in that market during the
Mm.
time it was going up or it was going down.
Yeah.
Now, if it's pulling back, that you marked out your point of interest, which is your A shape or V shape.
Yeah.
If, like again, if there was enough volume, enough liquidity, trust me, it's not going to get to your A shape or V shape level. It will rather offer fair value at the 50% to continue going to where it's going because it's going somewhere.
Yes, sir.
That is it. Like it's a matter of, like, I don't know how to put it, but if I'm going to say
Understand.
psychology or something, it's deep. It's very deep. So that's why trading is not just regular thing. You have to know, like, okay, we have to look at this area as well because this range is long and we have A shapes down here or A shape up all the way up and V shape all the way down. And this market is going down. Do I really want this market to pull back to all the way A shape where it started from? No. So if it might pull back to the 50%, there price might offer fair value there and continue going down or continue going up. So yes, you use those levels, of course. Why? They are key levels. But you also know that these other areas are levels.
Mm.
Yes, wisdom. Does that answer your question, Duna?
Yes, sir. Yes, sir. Thank you, sir.
Wisdom.
Let me ask you a question. What is not said? So, assuming now that this daily was the highest time frame we are looking at now,
Mm-hmm.
right? And we are looking at this current price and where this price failed to close.
I think I understand what you want to ask. Yes, go on.
And I have this A-shaped level, and I feel this previous candle, and this A-shaped level is not in my 50%. That means I shouldn't take the sell.
Okay. You can take a sell, but did you really see a clean opportunity to take that sell? That is the question.
Information. Is it what you mean?
And I can also say you shouldn't even take the sell because, like I say, if there is enough volume, enough liquidity, you can take the sell. You can go on your direction, right? But on a normal day, you want price to come into your premium to sell. So which means that A-shaped level might not hold. So the one that might hold is the upper level, which is the high of that green candle that we extended to the other side. Will be the point of interest in this case to push your market down, probably. And then if you go down to the 4-hour, those go down to the 4-hour, because you asked a question if we are looking at the daily time frame. Now you have an A-shaped level. You can see you have an A-shaped level that is in your premium. So that one, you can use that.
This one, right?
Yes. So in that case, you can use this while taking the very, very discount level to sell from there or something, But yeah, do you understand?
It's likely to say that if you give me confirmation before it gets to the premium, it will use my or something.
What?
If it gives me information around the discount before I even get to the premium, or even it does not even get to the discount, it has not gotten to the discount level, and it gives me confirmation, you keep on selling.
If he hasn't gotten to the discount, what are you saying? Price is on discount, for example, right now.
No, let's say it's not on discount, but I have that A-shaped level. Remember what I said?
So if it's not on discount, it's in premium, right?
No.
So where is price going to be? Because it's either going to be in discount or premium.
Why I should take the sell?
That is what I'm saying. So basically, it will be on discount. Basically, the price is already in discount, so it will be in discount, and you want to sell in discount. Is it advisable? I'm not advising that. If he give you a clear, have you not seen this? Why do you think we have that winning streak and losing streak? And again, the same setup that you used to take trade every day, you can take it, it will not work for you. Those might be one of the reasons. Just like you are asking, but you forgot that the price is on discount. You want to sell from discount with your correct strategy and everything, but it might not work and it might work. So the best way, you calculate your move very well. There is no rush in this market. There is no rush in this market. You wait for price to come to your real point of interest before you engage.
That means it's always advisable to buy from discount and sell from premium, right?
That is how it is.
You should stick to that. Okay, sir.
If price is already moving in your direction, now you are trading the continuation, that is when you don't need price to reach out to your discount or your premium. You are now trading with the continuation. But mind you, liquidity, very important. And that is when you have like probably your session liquidity or some kind of internal candles like 4 hours, whatever, lows and highs or something. Those are your internal in that way. But yeah, that is when, because you're not taking the continuation. So you don't need price to come to your discount or premium. because it's going somewhere and we started the journey already. So you are just following them along. Do you understand?
Yes, sir.
Yes, sir.
Now, okay, like I said, Rose, if you see here, you have like A-shaped level or something, so it doesn't matter. But go back to the daily now. Go back to the daily. So looking at this price action wisdom from like questions that you guys asked, like here in this area, this A shape, which is the green and the red candle right there, right? That can you take a trade there? And I said yes, you can take a trade. Is it advisable? Not really. But again, this market is coming from a premium area already. From that A shape that we found on the 4 hour, that's where the price is coming from. So now, looking at this place, do I want price to come to that A shape and react? I would love that if this red candle did break below and close below this, what is it called? That green candle low. That is when I would love that. But in this case, it didn't tell me that, yeah, that area might serve or something, you know. So I would like price to come into a deeper this premium area before I would start looking for selling opportunity. And just the same way, if you go to the 4 hour, you can find other points of interest around, because this level has already taken liquidity for sure. So we need selling opportunity. Rose, you can take out your fib so they can
Okay.
see. So yeah, if price may pull back into these two levels, like for me, I'm more like of the highest one there, you know. Is that orange or what color you put there? That is one, that one is one like I liked price to reach to before I will start looking for my selling opportunity, you know,
Okay.
for me, you know. And I can also buy this price to these levels. It depends what I will see from down here. It's in discount already. So yeah, I can also buy this thing to this level. And wisdom, you dynamics doesn't matter. So the reason why this is very important, you know, asking can we sell here from here? If you go to the weekly level again, go to the weekly time frame rules. Let's say we are using this week. It's not. Let's say this is a weekly time frame. Where does this weekly time frame closes? It closes in your discount.
Discount.
You cannot just sell like this, you know. You cannot sell like this. Rose, flip this candle again. Flip this candle
Okay.
again. Right. Now go back to that daily or something. Where is the 50%?
Mm.
You see, it's above that A-shaped level. Wisdom.
Yes, sir. Yes, sir.
Can you see that? So
I think
it's not advisable. You know, you want price to pull back into your premium to sell. And the point of interest in premium will be that high of that first green candle and the second half of the second green candle. So those are areas that I would like to,
All right.
you know. So those are things you guys have to put in consideration. I mean, you guys are still learning, yes, fine, but you know, we are here now, like twice in a week or something. You guys have to be picking up something. Imagine marking out that area now. Price give you opportunity to sell. Now you will now mark everything. Okay, shift the market structure. This price come here, and it will run you out. You think, oh, maybe is the strategy is something. What is evil strategy, by the way? Is it not the same thing everybody is using? Change the market structure shift, then price come here and sell. Change the state of delivery, price come here and sell or buy. It's the same thing. But what? The analysis is wrong. Just because he gave you that in a wrong point of interest or in your discount, why you want to sell, instead for you to wait for price to come to your premium, you are taking it in discount. Those are things you guys have to work on. That's why we start from the weekly time frame. It's a bigger time frame. Do you guys understand? And trust me, don't rush it. Don't rush it. Even if it's one trade you catch in a week, it has to be quality trade. And trust me, like there are people who trade like every day, still. I mean, you can make more money Monday, Tuesday, Wednesday, and lose it on Friday. So what is that? Why not just wait for that quality trade and just do it and relax? Now, yeah, go back to the 4-hour rows or something. So like this yellow line, which is above the 50% of this area, or all the 50% either ways, which is the inversion fair value gap price close below, it can serve. You see that 50% of your fib, right?
Yes,
Can you touch it?
This I think this is
Yeah, that one. You see inversion fair value gap there. You see the green candle, we have a fair value gap there.
The inverted.
Yes. So like wisdom is even saying, yeah, price come here. You see how price can reach out there, which is not even up to the level I want price to reach out. Just because it's the 50% of the weekly candle. Price can buy up to that area and start selling. But what did he do? Did he trade into the fair value gap of the 4-hour? No. Remember, there's the fair value gap above that candle. Which broker is this, Rose?
I think I use one.
Wanda. Okay.
Yes, I think it's Wanda. I'm not sure.
Yeah, I think it's Wanda for sure. But yeah, above this, there is inefficiency right there, which means price may not even come there, hit this level right there, this inversion fair value gap, and start selling. Why? Do you think it's wrong? No. It's the 50% of the weekly candle, of the weekly range, which means, that is it. You can just take off. It's a lot of things. It's a lot of things to put in mind while trading. So it's a lot, bro. And go to the 1 hour arrows. I just break it down. And again, I want you guys to know that I want you guys to be taking your entry from the 1 hour and the 15 minutes. 1 hour and the 15 minutes. So now, take out your feet, bros. Let me show something. Go to the 15 minutes. Oh, go to the 4 hour first of all. Go to the 4 hour. So mark out that A-shaped level that price tapped into. Open your chart very well. Let's see. Yeah. And let's see the backside price left. Move your chart forward. Move your chart forward. Yes. See that A shape? But you see here, your chart is different, but it doesn't matter. The top side, the top. Yeah, there, or the other one, it doesn't matter. But because you are using one that is different, yeah. So at that point where price get to that area, change the light to blue. So we can talk about
This one?
the line that you
I'm
just
talking about this one.
yeah, that one. Yeah, the line that you just marked out. Yeah, change it
Okay.
to blue. Now, I say take your entry from the 1 hour or the 15 minutes, right? I mean, you can go down. That is up to you if you know what you are looking for or something. Now, so price tap into that level. Now, you go down to the 1 hour or 15 minutes. So you can know what you are looking for, especially. First of all, price rejected that level. That is a sign. That is a clean sign. Price rejecting that level in that 1 hour. But yeah, go to the 15 minutes time frame because you are looking for certain pattern, right? Open your chart very well there. I mean, you can also go to the 5 minute, but open your chart very well. Yes, very well, very well. Right. Here is a clean thing. You see, there is a fair value gap on the green candle going up. Yes?
Mm-hmm. This one.
And
Is it
yeah,
this one?
yeah. Mark it. Yeah, just put line there. Yeah. Go put it down. Mark it very well.
Just put it right here.
Yes. A lot of things. First of all, you see the blue line. It got rejected from 1 hour and 15 minutes because I'm using 15 minutes anyway. That is a sign that price wants to sell. Now, what are you looking for? A pattern. You can see how the next candle turned red and engulf the green candle, right? Of course, that is your other block, whatever you want to say. That is number one. Now, the fair value gap was disrespected. It now become an evasion fair value gap. That is why you see the next red candle, it tap into that evasion fair value gap and you see that dropping. So I told you guys, fair value gap, evasion fair value gap, I use them for entry. Change the state of delivery, which is market structure shift and pull back, is for my, those are what I use for my entries. You must know them. And they work for you when you mark your point of interest, price react to your point of interest, and it gave you these things. If you go to the 5 minutes time frame, I don't know how this may look like because I didn't check, but yes, you can also use 5 minutes as your entry. Now, look at the 5 minutes time frame now. Is there any clean shift in market structure and fair value gap that price tapped or something? No. So which means in the 5 minutes time frame, now you have a shift in market structure or break of structure to the downside. Now you are now looking for price to retest these levels, right? So these levels, look at that green and is it orange line? You see that orange line that we marked out from a higher time frame perspective. So which means now you see these consecutive candles, this red down candle before price move higher. Touch them. Let me see.
These candles.
Those ones. I want you to use your rectangle to mark out that area. Rectangle, not line, rectangles. Yeah. Right. Mark. Yes. Do you know what is that? That is a breaker. Now, in these 5 minutes, price move higher, tap into your point of interest, sell down, give you a shift in market structure. So that area is your breaker. Did you see price retested that level yet?
No.
So you can see even the line that we marked out from the higher time frame that I say that was like Wednesday high, right? Yes. It's also aligning with that levels. These are not coincidence. You go into the 5 minutes to look for your entry, but you didn't see. That is when price change the state of delivery, shift to market structure. And price hasn't retested that level yet. That is why I'm telling you guys, those are not coincidence. You have to know the market. So, which means there is a probability that price may come back there before selling. And what is that now? Price has come back to our premium area. What do you do in premium? You sell. Because from the higher time frame perspective, this is what we are seeing. Now go down to the 15 minutes. I don't use this, but yeah, like I say, you can catch that entry that day from the 15 minutes. And from the 15 minutes, you can also see there is a breaker because there is a red candle down before green candle upside. Then we change the state of delivery right there. Price have not come there again. And there is your, what is it called? The orange line and your area. So those are not, this is not coincidence. It's something. You have to know it. You have to read. Like you must know, yeah, this is market. So price, I think market just open right now, yes?
Mm-hmm.
Mhm. Any question? Any question?
So like right now, where we are looking for
I just want price to pull back to
price
that level.
to put. Okay.
For sure. I just want price to pull back to that level. And yeah, I can start looking for, selling opportunity, like I say. Same thing I'm saying, just pull back to that level and I can start looking for selling opportunity or something.
So we want price to pull back to this level, right?
I don't use Rentago, just that line. Again, the way I trade is the way I show you things. That is why I say mark that line, that line. I use once price react to all this line, then I'm good. It's telling me that yes, price is reacting to my level. You know, yeah, there are just other things to read because if price will come into that box, you see how big is the box. But I just want accuracy. Okay, yes, that area is that area for me. So mhm. You can delete the blue line that you put in inversion fair value gap. I just showed you that is how price use that area to deliver price to the downside to give a shift in market structure. But yeah, now it's a new week, new thing. You can also delete the blue line up, go back to the higher time frame. Yeah. Doesn't matter. Yeah, yeah. And yeah, you can also delete that rectangle either ways. I don't know if price is going to use that, but yeah, it's just the 50% of that, what is it called? The weekly range. But yeah, every other market you have on your chart, If you like it, you can leave it. But yeah, those are my two areas, the yellow and the orange. I would like price to, especially the orange. I keep saying the orange line. That is where I want price to reach out to. Yes. But that is it for now. If you don't have any other question or something.
Be open-minded on the both spots.
What?
You should be open-minded on those two areas there.
Yeah, like whatever price is doing around here is basically what you want to be, looking at. Anyway, so this is GU, and maybe we didn't talk about GU. Even if they are USD cross pairs, but they move differently somehow, GU and gold. So I don't want to start from like bigger right time frame, but yeah, from the monthly perspective, we have this monthly high, and I think GU is coming to take out this one right here. But is he going to do it now? I don't know. This high. Because I know a lot of people, I think majority of people say, yeah, it's a break of structure. Price is coming here. I don't know. Let me see the daily. Probably people are thinking price is coming here to sell. And me say price is coming here to take out this liquidity. Simple as that. When is it going to get here? I don't know. But yeah, this is what I'm saying. So the closest area is this high and this high. This is the next one right now. This is the current month. So going to the weekly time frame, what can we see? We haven't have inefficiency right here. And we have inversion fair value gap right here. Should price come into this inversion fair value gap and create some kind of inefficiency right here a little bit, like this, and keep on going. Remember, this is previous week high. This is our next liquidity target. From where are we going to take this price action? So look at this line right here. If I will fill this level, it's just below and it's above this area. So this area is in inversion fair value gap. So which means like I display right here, price can come down like this into this inversion fair value gap. Then I can start looking for opportunity to go long. Plus, it might hit this 50% of this range and continue going higher. So it just depends, and it can just buy up first and continue going down for a little bit before buying up. So looking at this from the daily perspective, let me take this on that. Looking at it from the daily perspective, what do we have here? We have 50% of this candle, and we have this candle stick and close above, rejected this level. So it might serve as liquidity right here. If price will come up into this level and take out this high and tap into this level, I will be looking for shorting opportunity. How does it look in the 4-hour? We have relative equal highs, which is what? Liquidity, like I say, from that area, So I wouldn't be surprised. Now, what do we have here? We have a break, a break right here somehow. And this break, this is the high that caused the break. If this high took liquidity before it caused the break, no. So the high will become liquidity for some kind of point of interest, which is the one right here. So right here. So this is what I'm looking at. I will look to short GU as well for the moment. Let me take out this one. Around this level. Let me see the 1 hour, what we have around this level. Around this level, yeah, we have this, open and close on this area right here. But we will see what will happen if we sell first, doesn't matter, but we are still going to trade. But I would like price to reach out to this level before we buy. So around this level, what do we have? We have inefficiency that has not been filled. Right here, we haven't filled this inefficiency. And we also have this level. I can just use this. If you want to mark it out like this, doesn't matter. That price has not tapped into, Now, what do we have? If this is the low, have we closed below it? Yeah, automatically. And what is that? Inducement, liquidity for this level to get tapped into. So this is how I also want price GU to come like this and sell. We're into this area, then probably look for buying opportunity within this level. Within this level. Are we going to create that fair value gap I'm looking for? Maybe. 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 From the weekly perspective, I mean, maybe, if we tap into this area and still left some kind of gap here, it will be fine. A little bit like this. It's not bad. Like this. Then continue going back up because price is kind of bullish for now. Then we will target the high of previous week. That one and potential all of this because we are coming all the way up for sure. So this is what I'm also looking at GU. But like I say, go to buy up first, then sell. The same way this one may probably do, buy up first and sell. But we will see. Don't want to stock on, yeah, he must do this, he must do this. But yeah, that is what I would like to see this pet does. And I'll put all of this, yeah. Any question?
Thank you, sir.
What?
No, sir. Thank you, sir. We'll go through. I'll reward